Hi, my name is Ben Jones, and I'm an analyst at Dorsey, Wright and Associates. And over the last week, we've seen the Indian equity market kind of trade sideways for a little bit. It was relatively flat for the week. And if we look at, let's say, the 50 rupee chart of the CNX Nifty Index, we see that it's still trading in a negative trend. We did see it bounce up a little bit in the month of May. It added another X there at that 5,600 level. But even still, supply is in control on the short-term basis. And as a result of this, of the weakness that we've seen in the Indian equity market and the fact that we really haven't seen many of the major market indicators turn positive yet, today we want to offer a unique strategy that provides some sort of a hedging capacity, and that's what we like to call pairs trading. This is when you buy two stocks from the same sector, one that is technically strong and one that is technically weak. And you buy the strong stock while shorting the weak stock. And this provides a hedge because you're able to participate in kind of two different types of capacities. Let's say your strong stock rises significantly while the short falls, you make a profit. You're able to participate in that capital appreciation. And let's say the long stock falls a little bit, but the short falls even further, you're able to take advantage of that spread. And the same goes for if that long stock rises much more faster than the short stock, you still are able to benefit from that spread. And that's why it does provide somewhat of a hedge in different types of market environments. So let's look at a couple examples that you could employ today as well as next week. And these are some stocks that are from the same sectors, and some are weak and some are strong, and you can go long the strong one and short the weak one. First example is going to be from the telecommunications sector. This is Bharti Airtel Limited. This is a 5 for 5er. This is the stock that you would go long. It's trading in a positive trend. And we're looking for long ideas in the pair trades. You want to look for stocks that are trading in positive trends, have positive relative strength, and are at least 3, 4, or at least have a technical attribute rating of at least 3. And definitely 4s and 5s are great stocks to look at. So Bharti Airtel Limited is one of them. Positive trend. 5 for 5er, just reversed up. And the short that you can employ with this stock is Tata Teleservices Maharashtra Limited. This is negative trend, 0 for 5er, possesses no relative strength at this time. You would sell this one and buy Bharti. Now, in the technology sector, one stock that you can go long in the pairs trade is Kapit Cummins Infosystems Limited. This is a 5 for 5er, trading in a positive trend. We just saw a pullback to support. You can buy at the market. While you could short Revathi Equipment Limited. This is a stock that is weak on a pullback and has continued to trade in a negative trend. In the industrial sector, you can look at Siemens India Limited. It's trading in a positive trend, a 5 for 5er. We just saw it pull back to support. It looks good here. Go long Siemens while shorting Voltamp Transformers Limited. Negative trend, 0 for 5er. Sell the stock right now. It is extremely weak at this time, but right now Siemens looks like the better play. Pairs trade would be Siemens and Voltamp. Another stock in the technology sector that you could possibly explore is HCL Technology. Positive trend, 5 for 5er. Just pull back while you can short California Software. Negative trend, 0 or 1 for 5er, just is down around that 29 level. So you can look at HCL and California Software for a potential pairs trade. So this is a strategy that may be useful at this market that we're in India right now. It does provide investors with the ability to have some sort of hedge capabilities while still taking advantage of either a rising market or a falling market. So that's it for the DWA India Minute. Check us out next week.